And the volatility continues. There's no doubt about it. Good old President Trump, what's he up to next? President Trump does reckon there's a positive deal to be done with China. Time will tell. There's a lot of tit for tat going on there in terms of the trade tensions. Certainly helping the gold market go to record highs, but let's see what happens there. Also, we've got more expectations on inflation. And inflation expectations, as we know, hit a peak not seen since 1981. And that also caused the US bonds to sell off, which saw the yields actually push up to 4.5%. And in the Aussie, we've had a good bounce off the lows, finally. Probably into something there, and we've got cemented a major low. Let's have a look at the US bond market. I think it's important that we do get a bit of a good idea as to why the US bond market has been so important, particularly in this, and sort of all come at the same time when we've got all these tariffs and inflationary expectations as well. When you look at the US bond market, what does it do? It does there for a few things. It's a safe haven. It's a steady market for a lot of people to invest in. Currently we've got Japan as the largest holder of US bonds, and China's number 2. And when you look at it, when you see rising yields, what it does is it amplifies the recession fears in the market. And to me, that is something that is a major concern. But when you do look at the bond market, and the market focus on is that 10-year note. That reflects where things are and what people think the market is more near term. Now, US bonds, a lot of governments like it, a lot of investors like it. It's a steady return, it's a stable return. Of course, it's sort of backed by the government, US government. So a lot of people invest in it. We have seen a shift in sentiment, particularly in China. They've moved away from it, and we saw a massive sell-off last week. That was general investors. Also, I guess there would have been some foreign governments there looking to diversify some of their risk, and they're also moving out of that market. They won't move out of it entirely, but they'll start to move and look for other areas to get into. I guess when you look at the US bond, it's there, I guess, allows the government to raise money to fund its deficits. And I guess that's the main reason for it. And it is a barometer for how the economy is actually going. And to me, that's one of the most important things for it. I mean, as the 10-year note in itself, it influences mortgage rates, business loans, consumer credits. If you have rising yields, then it's going to be tighter monetary policy. And it also looks to, and so with that bond price, looks to reflect how investors actually see it. So there's lots of things that are attached to the US bond market, which makes it a very integral part of the economy, any economy for that matter, because it just gives them a reason as to why they can actually, it's why they are so important. And I think, when you look at what's happening there and you look at the numbers that came out of the University of Michigan, consumer sentiment and expectations on inflation, it doesn't look too good. And that is one of the major concerns that we have going forward, because that's a shift. It's a seismic shift in people's views. And that to me suggests that this trend that we're actually seeing at the moment is a trend that's going to be here for a fair while. Now, not a lot of people have been in a bear market. And I was lucky enough some 40 years ago. Would that be right? Yeah, some 40 years ago to see a bear market. And when you look at it, it's sort of expectations are that this rally which we're seeing, when we do get it, it's over. The flash crash, it's like a flash crash. It's a fundamental thing that's gone wrong. This isn't. This is a different thing. This is a low impact moving train wreck. And when you see it, it's sort of people get optimistic, then things will start to slide lower. Optimistic, and they slide down with different numbers and things like that. And unless there's a reversal in the tariffs that we see from the Trump administration, then you're not going to see a reversal in terms of this trend. The 90-day cooling off period, which he gave the market, is just pushing things down the road. I do get a lot of sense of why this is all happening and why Trump wants to do this for pure economic reasons and not just to make America great. Because if you look at the government debt to GDP, the US government needs to raise some capital to sort of get to resolve that problem, because that can't keep growing. So that's just one reason why I think. Also, US dollar. Having the US dollar so strong is not very good for exports. So I think you'll find there's a bit of a change there. So there's a lot of good reasons, good things as to why Trump's doing this. The question is how the market's going to take this. And it might be a year, 2 years, 3 years. And that's why we do feel that this is going to be a trend that we're going to be seeing for some time. Equity markets will go lower. I think gold will continue to trade higher. The US dollar will go lower. Bond prices hopefully will start to come lower. But at the moment, we're at those highs we haven't seen since 1981. That is a concern, and also very concerned for the Fed. So there's lots of things that are out there, and only time will tell us whether or not Trump has made the right decisions. On the face of it, our general view is that any tariff is a problem. It's highly inflationary, and if it's highly inflationary, well, then you can't expect it to things to turn around that quickly. So hence why we continue to be short in a lot of these markets, and long gold, short the US dollar. But let's have a look at some of those. But before we do that, this week's going to be quite important. There's some very sensitive data coming out, and I think that's something to keep a look at. We've also got some Goldman Sachs, likes of Goldman Sachs, Bank of America, Citigroup, they're all to report their quarterlies. We've got Johnson & Johnson, we've got American Express, Blackstone, quite a few other things. We've got US retail sales, industrial production, and first quarter GDP. So quite a volatile week, apart from all the other stuff which we've got to continue with Trump and what he's trying to do. Then that's another factor that's going to plague into some volatility.